Hello everyone, welcome to Smart Investing. I'm Albert, host of the channel, and today I have another 5 bank stocks that we're going over today. I'm going to jump right into it, and we have here these 5 stocks. UBSI, we're going to jump into that one, look over it overall. So first page that we have, market cap is at 5.56 billion. A nice little market cap, 52-week high and low. So we have that difference of $10. That checks out. PE ratio slightly high, could be a little bit cheaper. And then forward PE, pretty much about the same. Dividend, it's not high as I would like it. And then dividend yield 3.5. Not high, not too low, pretty average. But again, this ain't a stock that is good to have in an income portfolio. So as for earnings per share, 2.8, and numbers seem okay. Volume we have at 381K, so that's pretty active. Share price of 41.30. We have here the 1-year trend, but we want to see the 5-year. Last of 2020 high. I always like to go off of that because, again, this was just a major dip and then the major rip in 2021. So, again, 2021 was supposedly a good year and then 2022 was supposedly bad, but the last 2 months were pretty good and it wiped out pretty much the 10 months of declines for the year. And we were only down, I think, only, I guess, 12%, 12 to 15% around there. I guess on the S&P. But again, those last 2 months, November, December, especially October was the start of it, the mid-October. But then going into November, it just continued the uptrend overall. So that continued the uptrend on a bunch of stocks. So anyhow, it broke new highs up to 2021, which is pretty ridiculous. So it broke $39 and change. I was going to say 40, but close enough. And we're going to look at the 1 year. So right around here, back in August, it has broken the new highs. And then it dropped down, and then back in October, obviously it broke new highs, and now actually went down. This stock is very volatile. You have these big chops, then followed by the small, then big chops, and then followed by small. So very volatile stock, and then consistent dividend. I don't really look at the history of the dividend or earnings if they went up or down because that's gonna happen regardless. Some people take that in consideration, like, oh, the stock is going to sell off after they pay out the dividend, and then that's not always the case. It just happens to be selling because people just don't like the stock anymore. Yeah, that might be part of the reason, but that's not always the main reason. It just differs. So anyhow, moving on from that, and from the 3 month, it looks pretty flat, but it's crazy because on the 1 year, it still looks like it's on an uptrend. So we see that, then it kind of continues off of there. And then right here as well, still looks like it's on that uptrend. And who knows how long that can keep up. But again, this is a hard stock for technicals because you got these big jumps followed by these small spikes, and then throughout the whole year it's been like that. So I guess day by day this is a stock to pretty much take a look at, but even then it's still pretty tough and it's really not worth it with that price. So for the technicals, it seems like it's in an uptrend. It seems okay. We can look at the analysis, see what they say for the technicals. A bunch of bullish signs there. not so many negative. Saying bullish for short term, medium term, and long term. Then we have the fundamentals. Well, sorry, the quants, and then we'll deep dive into the fundamentals. So overall rating 3 out of 5. I use this as a guideline. This is not necessarily my final decision and say, oh, okay, that's final and that's it. Okay, so I'm just going to look at that and not take these into consideration and just pretty much guess. I don't really do that. Again, the numbers are always the facts, and it's pretty much how you analyze based off the numbers. So, again, it's always a consideration. It's not always like 100% accurate. It just happens to be if that number falls along with what you think with, then you just have to decide and accumulate more information to get a final decision to see if it's accurate or not. So anyhow, highest rating for this was momentum. So we'll see about the momentum. That will fall under the technicals, I would say. And growth, I would say, falls under technicals. Quality, value, and income, I would say that falls under... Well, value and income, to me, they're very similar. But if I was to differentiate the rest of them, this would be one category, this would be number 2, and then this would be a third category on its own. So momentum and growth of pretty much fall hand in hand, I think. So we'll look at growth from a fundamental perspective, and then we'll also see if the charts support it. So going into the fundamentals here, we have growing expectations here and earnings, as we can see. Then we have here in Q1 2023, flat for expectations. Then we have, let's see if we have 2022 numbers. It's not showing me. It's probably frozen or stuck or something. So net income 379, so about the same from previous year, and then better than the last 5 years, so which is pretty good. Debt is better than most companies at 84%, and this is a 2022 balance sheet that I'm looking at. Just making sure, just looking at stuff. So cash flow we have from 2021. That's all I have. So I'm surprised. Positive cash flow in all categories: operating, investing, and financing. That's very, very rare. So in all reality, this company has some potential. It does have some potential. So looking at the dividends real quick, 36 cents from a raise of 35 from back in 2020. It's going back up only by a penny, not by much. And again, to say yes or no to the stock, or maybe, I'd say maybe, so I'm going to hold off on this stock. It's got some potential, but again, very volatile, and the debt is actually pretty good compared to other companies. So we'll read about this company and then jump into the next one. So they actually involve themselves in the making of construction and real estate loans, which is definitely a good business to get into. That's actually a very smart move to do, because even when construction is done, there's times where things need fixing. So that even might be considered into getting a new loan as well, because so many people are involved, And then even once something is paid for, it's almost like a reoccurring revenue because uh, even though a contract is completed, does not mean it will be completed years beyond that because things might need to be repaired and stuff or looked at or inspected again. So it's pretty smart because of the reoccurring revenue and stable. So has potential, but we can move on from that one. Next stock up is NYCB. That's the ticker symbol. 5 year, it's very volatile, high volume, so a lot of momentum on this stock. I don't even have to look in the quants. Very, very high. What other numbers do I see? Earnings, it's not bad, could be better. PE seems okay. Dividend sucks. Dividend yield is okay. Market cap 6.5, 52-week high and low is awful. So this is not a quality stock. Even if it is fundamentally, but just looking at the numbers for 52-week high and low, people did not like this stock last year. So we'll see if they do like it or they did like it. I don't see any change for the year as well. Pretty flat. Even for the 5 years, it hasn't broken new highs that much. Only by like $2 and change for the last 5 years. So again, you're not getting much return on your investment. Either you're losing or pretty much staying flat. And that would actually depend on when you came in because we have longer periods of when they were down and then these really fast spikes going up and then all of a sudden they start going down. So for the most part, it would look like on average if somebody came in, they would have came in even randomly. It could be a 50 cent 50% chance, but again, you just see these really high spikes and fast drops, very volatile, and then there's really no period of staying still. And I understand because there's so many people involved with this when it's so high in the volume. So this looks like a day trading stock. This doesn't look like a stock to hold on the long term. And even then, fundamentals, they're just horrible. Doesn't really want to break out of any range. So you're pretty much stuck in that $5 range. This is not an investment to get some capital on return. So value, I could definitely understand. That was the highest rating. Momentum, I could see a little bit more. Growth, definitely not. But I'm surprised that number is so low for momentum. I would have thought much higher, maybe 6 or 7. I wouldn't think it would be that far behind. So for this stock, it's a definite no. To me, it's obvious to my eyes that based on the numbers and the way the numbers look, people are day trading this mostly. I'd stay away from this stock if you're considering this long term. I also do day trading. I'm not as active as doing it because of the way my strategy is. But again, I understand and do all of these things when it comes to the stock market. But I just don't see it for the long term in a long time at any time. So for day trading, yes, maybe. I would say yes for short term. For the long term, I would say no. So that would be my answer to you guys. And for how long to short term this, I'd say no more than let's see. So we'll want to look at some history here. So let's go for the last whole year. So we have small spikes going down, 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 ticked up, ticked up. So I wouldn't, honestly, it'll be hard to even hold on to this for a month. It's just so tricky. Because even in March, it was on a major downtrend, ticked up, and then all of a sudden you have this big spike. So I think month to month, it would be useful. No more than a month. I think we're better off week to week and swing trade this, if anything. But definitely to not get greedy on this stock. Next stock up, BPOP. So BPOP, definitely a downtrend as you can see. 5 years, so it's breaking and holding up above its 2020 highs, and it's been holding up. Small spikes down, but it's still holding up. $5 billion market cap, 52-week high and low, very respectable. Earnings are really, really nice at 14. Very cheap stock. Dividend payout for the year seems okay. Dividend yield is at 3%. So price as of right now is at $7.22. So this, I think I've heard of this company. I think this company is actually in Puerto Rico, and I know it's in some states. I don't recall which ones. I know it's on the East Coast. I used to live in New York, and now I'm living in Florida, so I've seen it before in New York. And for the fundamentals, I'm surprised to see those numbers. So digging deep into this, we'll see how really good they are. Return on assets. So they actually have pretty good numbers, staying flat. Expectations for 2022. I guess since it's a foreign bank, really, it's not really common. But in the numbers, looking at the numbers, let's see the annual. So ROA is at 1.5. Looks about the same. ROE did pretty good for last year. Earnings are pretty good. Debt slightly went up. Surprised it went up a little too much comparing by the last 5 numbers. Then we have here net income. We have net income has grown. Revenue, I would assume it grew along with that. So they're at 90, close to 94% on debt. Now I want to look at their cash flow. So hold on one second. I want to see. I wish they had the revenue. But oh well. Operating, investing, and financing. So they pretty much broke even on their cash flow. So I'm sure they're using some of their income from their net. So you have numbers that are pretty much breaking even, to be exact. 10.52. So they probably have some money from the net income, almost hanging by a thread really, and they probably have just enough to cover dividends. So they're doing okay. They're pretty much hanging by a thread. And I want to see if they have any split ratio. So 2012 and 2004. And see if they paid any dividends. They did, raising dividends. So went from 45 cents. They paid 13 cents in January, then 55 cents. So they actually made 5 payments in 2022 instead of 4. Those dividend raises are pretty good. Really, really good. Really, really good. And they actually seem okay. They actually seem okay. So obviously the company, like I said, in Puerto Rico, that's where corporate is at. They have operations in the U.S. and the Caribbean, service through its banking industry subsidiary. They also do auto and equipment leasing and financing. They have broker dealers and insurance services. So that's definitely a must if they want to grow. Definitely the broker dealer. So they're a community bank, but they're actually pretty popular and pretty strong. Uh, I actually would say yes to add this to a watch list. So even though they're hanging by a thread, it would be okay to add it to the watch list. So next one up is LBAI. So with LBAI, $19.63. It's called Lakeland Bank Corp. Chart for the 5-year, it looks pretty flat. And then the 1-year, it's broken the trend for the whole year. So the high for the most part was around a little above 18 and change. See, it broke new highs in November and then it dipped down. Then it broke new highs for sure back in January. So when we look at the first page in the numbers, $1.27 billion market cap. PE ratio is slightly lower than 15. So not deep value. It's getting there. It's just somewhat of a cheaper price. 58 cents for the dividend. 52-week high and low. It's pretty awful. Earnings are I mean, I'd say they're awful, but then looking at the market cap, it's hard to say. And then you have this uptrend going on ever since July. So it's hard to say if they're gaining momentum and market share. It looks like they're doing better than before. And we're going to see what is going on with the quants. Now, for the quants, highest rating is the value. Like I said before, momentum, I would say it's a little bit better than that. I don't agree with the 3.5 rating. This I'm not sure about. And the income is awful. And this one I'm not sure about. So these two, quality and growth, I'm not sure about. Momentum seems like it's there. It has some strong activity, better than most companies in the banking sector. Now we just want to see some earnings estimates. So it's pretty much a nice little circle here. And then it's starting to go down. Now the next time it is reported is in April, late April. That's pretty much a long time for it to be the first quarter. But every company is different. So ROA 1.2, about the same. I'm looking to see if anything stands out at me. Earnings about the same. The debt about the same. So everything seems pretty stable and normal for the past 5 years. Nothing impressive really. Net income has done better than last year. That is obvious, but Again, that is for the numbers of 2021, not 2022. Now, balance sheet, close to 90%. Now, pretty much one of the main important factors, which is the cash flow. So this would actually substitute the debt, in my opinion, for my perspective when I'm analyzing. This will actually be the most important factor. So we have 95 million in operating. Then I'll round that up to 100. So we got 578. So negative cash flow, not a good sign. Just with that alone, and then also 52-week high and low, it's just not a good investment. And then with the earnings, they would have to go up. So we'll see what they do. If they beat earnings, they would have to beat them with a wide margin for Wall Street to be interested, and hopefully the share price goes up. If not, then they would have to continue that winning streak on beating estimates by big margins. At least 2 times, I think people on Wall Street would get their attention and get them interested. So I'm going to say no to this stock and move on to the next one. Next one up is LBAI. Wait, sorry. That was the last one that I did. Next one up is CTOS. I don't know why this company came up as so again, I don't know why that company came up as a banking services sector company, but for that company, that was actually not a banking services sector company. So I apologize for that one. The next company actually that I have is BRKL. So for BRKL, we'll just go over this one real quick. 54-cent dividend, yield is at 4%. I don't like the numbers. It seems pretty active on the volume, some activity. 52-week high and low, a difference of not even 10, so that's pretty bad. Another one with a market cap of a little over $1 billion. Earnings per share is at 1.41, but we want to see the earnings estimates. That 1 year seems awful. The 5 year, you see that huge drop, then that huge bounce so fast. With that V, that actually spells violence to me. It's not common, again, I've been saying this for years, it's not common for a stock to drop and then all of a sudden rip up so fast by that much. Yes, it's pretty cheap and it's only a $4 move or whatever, $5 move. But I'm saying overall in 2020, you see all these dips and all of a sudden starts ripping like literally in like 2 months. That's just not normal. I'm not surprised in 2022. And again, I'm waiting for a big crash. So I wouldn't be too excited. You know, you gotta have the emotions on and off switch. You win some, you lose some. But as for this, it seems flat. So again, I don't like the technicals. Technicals need some work. So they're not bad or they're not good. They need some work. They're okay. And then we have, again, on the first page, all these numbers. They seem okay, but the 52-week high and low is definitely a major alert to me. It shows that people are not liking the stock. So therefore, why invest in it if it's, you know, not worth it to get any return on it? Nobody likes throwing money down the drain. I think that's what we're all here for anyway. So moving on to the quants, they have a rating overall of 4 out of 5. I don't see it like that. I see more of an average rating, more on the 3. So highest rating for this one was value. Obviously, the price is cheap, $13.45. So cheap enough. Second highest rating is quality. That I will have to investigate in the profile. We'll see about that. And so Bank of Rhode Island, I want to see what they do and what locations they have, and somewhat get a insight on their business model just by reading about it. So they have subsidiaries. They operate as a subsidiary as well. They do commercial, municipal, and retail deposits. And then loans and leases to small and mid-sized businesses. Investment in debt and equity securities. So they do some trading. So that's fine. It all depends really on the performance of the traders. So this stock is actually a stock that trades. I'm surprised for a small bank like that. So anyhow, we have the financials left. See what's going on with that. Estimates have been revised, obviously, and then Q1 really drastic change. That's like at least a 5-cent differential. And then we have here for the annuals, I do have 2022 results. So pretty much about the same from last year for the return on equity. ROA, about the same. Earnings about the same. Margins, not telling me anything. I'm going to skip down to the net income. Slightly lower than 2021, so about the same. Now we just want to see the cash flow and see what's going on with that. So we're at 260, about 260. And then we're down actually by about 110 million. So wow, so about 110. They're pretty much breaking even. Another company that's just breaking even in their investment. I think this stock should not pay dividends until further notice. I really think they should cut the dividends through this whole year. They were pretty much operating on zero. That's not a good look. I wouldn't run a company like that, but to each their own, taking a high risk like that. The company looks insolvent, really breaking even. It's really hard to admit, to say that, because I just don't understand why companies just don't go bankrupt. Instead, they just want to prefer running on the deficit, and then eventually just keep those debt levels going up, much like what the government's doing. So even with that said, it's just weird to see that and say that, because I know some way, somehow, some of these companies get away with not being bankrupt, and they're awful companies. Again, I don't see how the dividend can be supported by this if they're like pretty much on zero. Like I said, they're not cash flow positive or cash flow negative, and they're using the net income to cover pretty much everything. They do run their business model through debt, but then they just have to charge more. But who will want to pay more in fees and all that and whatever, unless they have to. And then also people just find different banks. So I'd say no for this stock. Obviously no. Do not add this to the watch list. again, the only reason I say I could be wrong, that was me being realistic, having a bearish sentiment. The bullish side of this would be uh, whether they beat their earnings estimates or not, they can gain market share. Let's say even if they go up $2 at minimum, that will make a huge difference if, let's say, they sold shares after they did buybacks or for whatever reason, because they get discounts on their share prices anyway. But if this stock happens to go up, even for a few weeks, hopefully they can cash in on that as shareholders and think of something. Because again, stocks move up and down and sometimes sideways. They just don't go up for years and years and years, and they don't stay down for years and years and years. That's just the way it goes, you know? And it takes a level of skill and intelligence and effort to do all this. So, with that said, I'm going to call it a night. That's it for me. I have more banking sectors to go over. I know this video is long, but again, if you don't like the video, that's fine. If you're not watching the whole video, that's still fine too. I'm still using this as a log, and I'll view this on my own to get a recap and, go back in time once years pass by and I cover all sectors to see if this stock was good or not, and, to try to recap and cover this stock in my history log and use this on my channel. So thank you guys for watching. Stay tuned for more videos for the banking services sector. Again, I know I promised them to be short, which I do have shorter videos. I wish they were shorter than this, but it's just a lot of info to look at. So there we have it. So thank you guys for watching. I'll see you guys soon in the next one.